Hi, everyone. This is Ali Hussein Kasim from Ali Talks Tech. In this week's weekly roundup of tech news in Africa and beyond, we are covering a couple of stories. We'll be looking at Mastercard and Orange partnership. That's Orange Telco. We'll also delve into the Kenya banking industry customer experience report. I'll also be sharing some super interesting TikTok statistics in Kenya. We'll then dive right into the reality of telco interconnections and cost across Africa. Finally, we'll delve into the latest reports in open banking and finance done by the Center for Financial Inclusion at the Oxford University. So, straight into Mastercard and Orange partnership. Ladies and gentlemen, the land grab continues. Mastercard has signed a partnership with Orange, and really, this is on the back of a number of agreements, partnerships, investments that have been happening on almost on the back of each other over the last couple of years. To just give you a glimpse of what has been happening in the last couple of years. First, let's look at the Mastercard and Orange partnership. This is looking at expanding mobile financial services across 7 African countries, potentially reaching millions of Orange Money users by 2025. There was the Mastercard and MTN partnership, not just a collaboration in terms of operations and in terms of markets, but also an investment into MTN's fintech arm. Then there is the Visa and Visa and M-Pesa Africa partnership that introduced M-Pesa Global Pay. However, I must say, I'm a bit disappointed with this M-Pesa Global Pay. It still doesn't cover many countries. The other day, I needed to send some money to my niece in Oman. I went to my M-Pesa Global Pay and Oman is not on the list. I mean, really, what's up with that? Oman is one of the most important GCC countries. That's the Gulf Cooperation Council countries. How can Oman not be there? And with our historical connections with Oman, this is something that needs to be looked at. M-Pesa, I hope you're listening to me. Then there's a Visa and M-Pesa, then there's a Mastercard and Airtel Africa partnership and investment. So on the back of all these activities, we now have Orange Money. So Francophonie countries, the telcos in the Francophone countries have sort of been slow in adopting this new dispensation. A couple of weeks ago, I was at the Novacom event and I met somebody who's become a good friend of mine, who's the director of Airtel Money in Niger. And he was telling me that only 6% of Nigerians actually have access to mobile money. There's some historical and cultural and religious issues that they need to sort of get over with. So this is not the last. We are seeing these big companies in the payment ecosystem across the world taking mobile money in Africa very seriously. The integrations with their cards, their virtual cards, the access into the global payment ecosystem by mobile money's providers in Africa is going to be super, super interesting. As I close on this story, it's important to note that out of 1.4 billion Africans, only about 300 million of them actually use mobile money regularly. So you can imagine, despite the success of MTN Mobile Money, or MTN Momo as they call it, I find that name a bit, they need to find another name. This MTN Momo just doesn't seem to sit well in my Eastern African tongue. But, well, maybe in South Africa that would sound a lot better, and in West Africa. Anyway, back to more serious stuff. If you look at the ecosystem that is mobile money, despite the success of MTN Momo, um, M-Pesa, Eco Cash, there's still a lot to be done in this space. So watch this space as far as mobile money is concerned. We now look at the Kenya Banking Industry Customer Experience Report that was launched a couple of days ago. I did a quick analysis, and here are the key findings. Let me read them for you. 79% of Kenyan adults have access to financial services. Not bad. I mean, we've come along a long way from the days where it was less than 20%. Mobile apps, 42%, and branches, 24% are the preferred channels. Customer experience trumps pricing for channel preference. Guys, let me repeat this because this is a pet peeve of mine. Customer experience. We just don't seem to be getting it. Most of these apps are clunky, they are unstable. The experience is just atrocious. Customer experience trumps pricing for channel preference. Let me repeat that again the third time so that it gets into people's heads. Customer experience trumps pricing for channel preference. Now, this is not Ali Hussein saying. This is the bankers themselves doing research and getting this response from their customers. Top expenses are food, 17.7%, housing, 17.2%, and education, 11.5%. I love this next analysis that the Kenya Bankers Association did. Customer personas, and this is very important. So they've identified like 5 different personas. The progressive, young, tech-savvy, value-conscious. The valued, prefer in-person banking, loyal customers. The minimalist, unbanked, rely on mobile money. The switchers, price-sensitive businesses. And last but not least, the cynical, demand teller products and attentive service. I guess you can put me on the cynical side. I have no apologies to make. So then they go into intervention areas. Enhance mobile app functionality and reliability. 2, optimize branch operations to reduce wait times. So interesting, this has come up. I'm a member of this super interesting, absolutely educative group called the Digital Disruption Caucus, DDC as we call it in short. And I have always said this, and I continue to say this. The branch is dead. Long live the branch. So some people misunderstand this term. What I mean is that the old way of engaging customers using the normal branches, that's dead. That's dead. You can't walk into a bank branch and you're seeing 4 or 5 different teller windows and there's only one teller. What the hell? What's up with that? Just redefine what a branch means. Banks like Equity Bank are now saying 98% of their transactions are happening outside the branch. Why are we still opening branches that look the same like the one I walked into with my father when I was 6 years old? Come on, guys. Let's get on with it. Develop products tailored to young customers' needs. Gen Z, anyone? Improve online banking for business customers. Oh my God, don't get me started, man. I think online banking for businesses is the most atrocious thing you can ever think about. I just simply avoid it. Sometimes it's easier to just write checks. I'm not kidding you. Provide financial literacy programs for unbanked segments. That last statement on financial literacy, that's an interesting one because I just read a TikTok report on how people use TikTok for financial services information, and that is super interesting. So banks need to focus on personalization, digital excellence and addressing specific customer needs that will lead in addressing customer needs and hence acquire more customers. So now I want to look at TikTok. There's some super interesting, mind-blowing TikTok reports on Kenya specifically. So a good friend of mine shared this report with me, and I was just fascinated. Eye-popping insights on TikTok users in Kenya. One, a whopping 69% of these TikTok users have savings accounts. Who'd have thunk? People think that TikTok users just there making noise and doing junk. 57% are using debit or credit cards. 18% are diving into investments. 21% have short-term loans. Only 5% use banking financial apps. It's interesting how that sort of dovetails with the report from the Kenya Bankers Association. So I think financial services players need to start asking themselves why. Now, let me give you guys some insights. I'm going to give Rose Muturi a heads up, managing director at Branch International, which just acquired a microfinance bank a couple of months or maybe over a year ago. That branch up is just to die for. It feels like halwa. That's how nice and easy it is to use, and transparent too. It shows you your rates. It shows you, it is just fantastic. Yeah. And that's the sort of benchmark we need, not just in Kenya, but across Africa and probably the world. So it got me really thinking when I looked at these TikTok data. With such a financially engaged audience in TikTok, why aren't more Kenyan companies, and especially financial brands, maximizing this platform? Is there some discomfort or not understanding what TikTok is all about? I remember a couple of months ago, my two colleagues, Imran and Hashim, literally forced me to get into TikTok. And guys, I resisted, but I have never regretted it to date. Our TikTok presence is growing on a daily basis. So I'll be delving a little bit more into these TikTok statistics as we move along, because I think this has become an interesting platform, especially for Gen Zs. The other thing that I want to say is that it seems like TikTok is the new search engine, at least for the younger generation. So Google, watch out for that. Now, I want to go into the realities of African telco pricing and probably global telco pricing. Let's not just single out African telcos. If you're like me who travels, the minute the plane lands, if you are roaming, you get this alert. Roaming charges. These charges are atrocious. They are crazy. The one that stood out for me is my good friend Jack Ngare showed me something that as he was traveling back from AfricaCom, landing in Harare, he gets this alert that tells him for roaming 1 MB of data was going to cost him 2,850 shillings. I'm like, what? That's a whole month of bundles in Kenya. 2,850. Guys, telco executives across Africa, there's something we must do. All of you guys are on the same GSMA platforms. Come on. We can reduce these costs. Let's get on with it, guys. My last conversation is on open banking and open finance. And this report is coming at the right time because the Association of Fintechs in Kenya, the Kenya Bankers Association, and FSD Kenya are currently deep in the midst of working on an open finance document that we hope could and can be used by players, including policymakers and regulators, to move us faster into the new realm of open finance. So this report from the Cambridge Center for Alternative Finance, Cambridge Judge Business School, has just released its Global State of Open Banking and Open Finance report. And fascinating trends, guys, across 95 jurisdictions. Some key takeaways. 1. 54 jurisdictions have adopted regulation-led approaches, while 28 follow market-driven models. Europe, Central Asia, the Middle East, and North Africa largely follow regulation-led frameworks. And we will talk a little bit more about that. Asia Pacific shows a preference for market-driven approaches. How about Africa? Where are we at? So let me spotlight Africa a bit. Sub-Saharan Africa is emerging as a leader in market-driven open finance innovation. Let me underline that. Market-driven open finance innovation. This region is leveraging its mobile-first infrastructure to drive financial inclusion and create innovative solutions tailored to local needs. So let me paint you guys a picture. The big players in mobile money across Africa, that's M-Pesa Africa, MTN Momo, Orange Money, and Airtel, all have some sort of API platforms. I think for me, because my home country is Kenya, the most used one is the Daraja platform by Safaricom. So that's some form of open finance where people are plugging in with APIs and stuff like that. Now, banks have tried it. And let me not mince any words, guys. For lack of saying anything else, most of these bank market-driven API platforms are clunky. They require you to be a rocket scientist to decipher what they want you to do on those platforms. It's just a bloody mess. I'm not mincing any words, guys. And anyone who has a different opinion of different experience, please, happy to invite you to one of my podcast events and we have a deep conversation about it. I'll be happy to be proven wrong on this one. So why am I griping a lot about this when this report says this Sub-Saharan Africa is taking a market-driven approach? The problem with just a purely market-driven approach is that we leave it to the vagaries of the owners of the platforms. They're not set global standards. They're not set pricing, and everybody, it's a wild, wild west conversation. And we need to bring all these to bear. We need policy and regulatory intervention. We need market-driven interventions. And when these two come together, we get the perfect mix. And I hope we can achieve that. And the Association of Fintechs in Kenya is at the forefront of trying to achieve this for the ecosystem. So let's look at some of the countries that are doing this market-led approach. We're seeing exciting developments. Nigeria, despite the fact that they started with a market-driven approach, the policymakers and regulators have stepped in and they have implemented a regulatory framework for open banking. So kudos to my brothers from Nigeria. The thing that I would like to advise them is to move beyond open banking and start embracing open finance, because that will bring together the different players in the financial services ecosystem: insurance companies, issuer techs, wealth techs, reg techs, fintechs, mobile money, bankers, all together. Kenya, we are exploring open finance regulations to complement our thriving mobile money ecosystem. This is still up in the air. Things are moving, but we need to move faster. In South Africa, they're developing an interoperable payment systems to facilitate open banking. So the continent has unique challenges and opportunities. We are shaping a distinctly African approach to open finance, and I love that. The potential to leapfrog traditional banking models is immense. We're already doing it with mobile money. So I'm going to stop here and ask you, what are your thoughts, guys? Please, as you watch these episodes, be sure to leave your thoughts. Let me know what you think. Let me know what subjects you want me to cover in our next episode of the weekly roundup, or better still, if you have one particular person you'd love to see in one of my podcast episodes, give me a shout out either on the YouTube channel comment side or reach out to me on LinkedIn. Asanteni sana.